Hello, my name is Zayn Kalyan, CEO of Scorpio Gold, and today I'm happy to be here to present what we've been working on with our Manhattan project located in Nevada. Scorpio has been a historic company. It's been around since 2009, and there's been a lot of shifts and changes of the company over the past 2 years. And we're very excited to share what we've been working on with Manhattan, where we're taking the project, and ultimately how this project differentiates itself from a lot of the other projects in Nevada in the Walker Lane, and ultimately is a great opportunity for investors. I will be making some forward-looking statements. I encourage you to read this in your own time. So the Manhattan District is located in Nevada's Walker Lane Trend, located about halfway between Las Vegas and Reno, Nevada. It's very close. It's about 40 minutes outside of Tonopah, Nevada, which is a historic mining town. And today is a current mining hub for the district. We're located 10 miles south of Round Mountain on the same geologic structure. Round Mountain is Kinross's second largest mine and the largest mine in southern Nevada. It's a 16 million ounce historic producer, currently still producing. And being on that same geologic structure really does position the project in a lot of ways that is strategic in terms of the future of the project. And I'll get to that as we kind of walk through the presentation. But beyond that, having that established geology and that established information and ability to kind of understand what we have in terms of an asset really does also help us as well. And I'll talk a little bit about that later as well. In terms of infrastructure, we're located very close to we have wholly owned water rights in the project, and we're located very close to a major highway that enables us access to a very experienced mining pool. Nevada is a prolific mining state with 90+% of the gold produced in the US coming out of Nevada. We have all the key vendors, drilling companies, contractors, everything that we need is located very close and very accessible. Beyond that, the project really is unmatched in terms of grade and recovery for the district, and stage of project. And that's really the opportunity that we want to hit home today as I walk through this presentation. We believe Manhattan is really strategically positioned, not only in where it's located next to Round Mountain, but also in terms of its grade and recovery, which do set it apart in a lot of ways. And we'll talk about that as I walk through the presentation. Just to go over the structure briefly, company currently has 221 million shares outstanding. We fully diluted 271 million. You can see here on the right, we have a fairly large land package. Scorpio has been able to consolidate 75% to 85% of the Manhattan district. And that ultimately is the opportunity and why this project has not historically been a mine. And really where we see the opportunity to really drive this forward with a truly district scale opportunity. You can see here on the north, you have the Goldwedge mine, which is historically what Scorpio owned. And then you have these gold claims and this historic Manhattan mine, which was acquired from Kinross in 2021 by Scorpio. And then to the southeast, you have the Keystone and Jumbo mines, which Scorpio has also held since 2011. And then to the west, you have these newly staked claims that Scorpio has recently staked, but do have a lot of historic exploration that's been done over the past roughly 100 years. And more recently in the past 10 years. So in terms of catalysts, we have a number of near-term catalysts and future-looking goals that we're working towards. Our core focus right now is getting our maiden mineral resource out by the end of June. We are working very aggressively towards that date, and we're very excited to share what we've been working on with the MRE. Alongside that, we have commenced drilling. We're going to be continuing to expand our resource over the next 12 months. With the current drilling that we're doing today, we're estimating that we can add between 300,000 and 400,000 ounces. That's with a 6,300 meter program that we are fully budgeted for. Beyond that, we are working towards putting together a modern metallurgical program so that we have all of our own data and we're really truly able to be super confident in the historic data that we have. We do have the benefit of having 4 distinct periods of historic production and all of the metallurgical data that goes along with that across the district. And having that data really does enable us to be incredibly confident in the 70+% recovery from heap leaching. So ensuring that the project in the ore is amenable to cyanide, but then beyond that, 90+% recovery from a full mill circuit. And ultimately, with our modern metallurgical program, we'll be able to fully understand all of the different mineralogy across the entire project, and then be able to really truly be able to look at how the project would be developed from a flow sheet perspective, with specific different types of ore that exist across the entire package. Finally, the drilling that we're doing this year, 6,300 meters, we intend to add that to an updated MRE towards the end of the year, early next year. What I would say is that we There are a couple of catalysts that we are working on, namely selling our Mineral Ridge project, which we are in the process of doing. And if that project is sold in the next, call it 2 to 3 weeks, based upon the numbers that we're talking about today, and we are very close at closing that transaction, we would look to vastly expand our drilling program and over double that. So going from 6,300 meters to nearly 15,000 meters in drilling over the next 12 months, which would then trickle down to a much larger expanded MRE. And we look forward to putting out that more data on that in the coming months. So really, this is the message that we want to hit home to investors. This project and this company is significantly undervalued in comparison to its peers. We are estimating to have delivered north of a 500,000 ounce resource in the next 45 days. On the back of that will have all of the historic data that supports the 70+% recovery from heap leaching and the 90+% recovery from a full mill circuit. In terms of grade, the resource that we're anticipating to put out here in the next 45 days will have a 1.3 gram per ton average grade. And then beyond that, being located where we are and with the land package we have, we really do see core opportunities to expand it considerably from the, call it, north of 500,000 ounce baseline in a very small percentage of the project to a much larger, ultimately, a package, and really drive this thing north of 2 million ounces, which is our goal. It's important to note that all of the data that's supporting this resource it's over 1,500 drill holes, over 140,000 meters of historic drilling. We're very fortunate to have a lot of historic data that's been done over the project over the past 30 years, 40 years. And a question that often comes up with that is, well, how much of that data can you actually use? The benefit is a lot of that data was done. It was all done by very experienced companies, Kinross, Echo Bay, and that all of that data we have all that historic data. We have full assay certificates, all of the logs. So we have a lot of data that we can leverage, and we're excited to be able to get. It's been a very extensive process to model all that data and really put it together in a comprehensive resource that we're confident in, and we're very excited to be able to get that out to the market in the coming weeks and months. Really, here on the right, you can see that in terms of grade and recovery, this project sits in a league of its own, and that's the message that we're really trying to hit home here. North of 75% recovery, near 90% or 90+% from a full mill circuit. It does really set it apart. And if you look at all of these projects below the line here, nearly all of these projects transacted or are worth over $100 million US today. And our company today is worth 23, $24 million Canadian. And that really is the opportunity for investors to be able to invest at this level, where the market does really not realize the opportunity with the company and really what we're truly worth, and really be able to experience significant multiples. And that's where we really want to, that's the message that we really want to convey to the market. In terms of a team, as you can obviously see, I'm a very young CEO, but I do have a very strong team of advisors and board members who are behind me. Charles Funk is a great advisor and mentor, was really a catalyst in helping put this company together and take over Scorpio and really focus our efforts from historically what has been focused on Mineral Ridge to Manhattan. Beyond that, Daniel Coons, very experienced technical advisor. He's the COO of Ivanhoe and then became the CEO. Dan instantly saw the opportunity with Manhattan, was also a very big driver and a core catalyst for the company to be able to focus on that asset. Dan and his team have been very involved in the resource, and we're very excited to deliver that, to work with Dan on that. And with such an extensive history and background, I think that'll give the market a lot of confidence on what we're working towards. And then finally, Leo Hathaway has worked with Illumina Group for nearly 10 years. Leo's a very experienced geologist, very world recognized, and we're really excited to have Leo on board. And I just encourage everyone to kind of keep a close eye on the news over the next couple of months as we really try to strengthen the team in a lot more integral ways, including Leo becoming more involved, as well as some great mining operators and experienced geologists and technical people. In terms of geology, I won't get too technical, but really want to kind of focus here that all of the mineralization in the project is primarily controlled by this Reliance Fault gold trend, which is the Reliance Fault, which runs effectively from the Goldwedge underground, which is the historic project that Scorpio owned, to the south through the east and west pit that were the historic Echo Bay pits. And then that Reliance Fault trend also runs further south all the way to the Keystone and Jumbo pits, which I'll show on a further map here. You have these splays that come off the Reliance Fault that also have mineralization, and ultimately where a lot of this mineralization is coming up is right where it meets this Manhattan caldera margin. And the caldera margin, this is the same caldera that is shared with Round Mountain. So 10 miles to the northwest of this, you have Round Mountain 16 million ounce mine. And ultimately that's the real district scale potential that we want to really hit home. In terms of historic drilling, here we have some highlights from some modern drilling that was done in the last 5 years. Some of these holes from 2022 have really outsized results. You can see multiple 100-gram plus meter holes that really are really outstanding in our perspective. And we're pretty excited that with the drilling that we're doing now, we have this opportunity to fill in some zones that historically had not been explored or not been drilled because they were existed in the property boundaries. And that really does give us a lot of opportunity to add ounces along an established gold trend. And really, with these historic drill results, we think these were kind of flew under the radar historically for the market, and were really not. No one really realized the opportunity here in terms of grade. And that really is what sets the project apart, again, from a lot of its peers in the district and other projects that are in the same stages as where Manhattan is today. In terms of the drilling that we're doing currently for the 2025 program, you can see these are these gold zones here on the right are our priority 1 targets. We currently are drilling in this zone between hole 24MN09 and 24MN10. That is the gap zone, which I'll show you on a later slide here, in a slide in a minute here, between the property boundaries. So historically, it had not been explored because you did have this. There was never one operator that owned both projects, that owned Manhattan and Goldwedge, which now Scorpio has been able to consolidate. And then to the south, you have targets that exist to the south of the West Pit, and then out to the east of the West Pit as well, which is this Mustang Hill target, which we really do see a lot of opportunity with. And I'm sure in the follow-up to this presentation, my VP of Exploration, Harrison Pokrandt, he will be able to provide more context and more data, get a little bit more technical and granular on the ultimate opportunity with the exploration program that we're currently running. I'll just briefly touch here. You can see this gold zone between the Goldwedge underground on the left-hand side, and then the West Pit, which is in the middle of the page. That gold zone in the middle is really the target that we're currently drilling, and where we believe we can add a couple 100,000 ounces here with the current program that we're doing, just to show the continuity of that trend that had never been established historically. Beyond that, I'd also highlight that at the bottom of the West Pit, you can also see this zone here that exists at the bottom of the West Pit. A lot of the holes that were drilled below the West Pit ended in mineralization, but were never continued to follow it up on. So that's another zone where we do feel that there is opportunity to add ounces, and we're going to be pretty excited with the drilling that we do there later this year to show that this really does have this potential to extend at depth, which if we can confirm that, will be very easy to show how this deposit can actually grow in multiples, 2x, 3x, fairly easily by showing that continuity of the mineralization at depth relatively easily. In terms of regional exploration, as I did say, this is a very large land package, and district scale is where we're attacking this. We're not doing this to find 1 million ounces and kind of cap it at that. We really do think this has a lot bigger potential. You can see in the middle of the map here, you have the core resource area, the 1.8 kilometers to strike. Beyond that, there's a full 6 kilometers of strike that exist on this Reliance Fault, with the Keystone and Jumbo mines existing in the southeast. Those are historic projects. They have high-grade breccia zones on them. We have about 60 historic holes that exist there. We will be working to put together, call it back of the envelope resource, to kind of define what the ounce potential exists there. But ultimately, you can see that beyond just that, the call it 500,000 baseline, 500,000 plus ounces that we're working towards in the main resource, they exist in this 1.8 kilometers of strike. We're going to be able to expand that considerably if we can confirm that mineralization exists along the entire structure, which is really where we do see it. Beyond that, to the east, you have the round rock targets, which have again, historic exploration that's been done on them. We do have lots of kind of sniffs and indication that there is mineralization that exists along those structures. To the north, Black Mammoth is a historic target that's got historic mining workings all over it. Never been drilled aside from one historic hole. That again is another great opportunity, another great kind of exploration target or regional target. And then Timber Hill and Mariah. Timber Hill is where the first mine that was built in the district in the late 1800s was built. There's a lot of opportunity to really show that this whole district has a lot of potential. And again, I just want to hit home that put this in the context that all of this exists 10 miles south of Round Mountain on the same caldera, on the same geologic structure. Beyond that, if you look to the east here, just south of the Black Mammoth target between Mariah and Black Mammoth, if you look to the west, you can see these workings on the map, which is this historic dredge. And this was one of the largest dredges in the United States, historic dredges. So over 700,000 ounces of alluvial gold was pulled out of this district historically. And really that kind of shows that there is significant gold here, and there has to be underlying structures that were driving the formation of that alluvial gold. And that's really where another message that we do want to kind of convey to the market. Finally, metallurgy, as I've repeated multiple times, historic recoveries north of 70% from heap leaching, north of 90% with a full mill circuit. This thin section you see here on the right is a thin section from a historic sample that was taken out of the bottom of the west pit. You can see here that the gold is not encapsulated, which again gives us a lot of confidence that it's non-refractory and that it's amenable to cyanide, and we'll be able to get very solid recoveries. Again, all of this is subject to be confirmed by a modern metallurgical program. We are relying on historic data, so I do caveat all of that. But at the end of the day, the historic data is promising, gives us a lot of confidence, and we are actively working on our modern metallurgical program currently. Well, and yeah, thank you for the time. As you can see, we got a lot on the go, a lot of catalysts in the next 60 days. We have the sale of our Mineral Ridge project. We've commenced drilling, so we'll be delivering results here imminently within the next 60 days from the drill program. Beyond that, we have some really significant, or not significant, but some really great board changes occurring with bringing on some really strong technical people. So really kind of fleshing out management, bringing some great people on. We just closed a big financing. We'll be selling Mineral Ridge, which we anticipate will significantly give us a lot more capital to work with, and expand our drilling program, expand our exploration program, be much more aggressive, and ultimately position this project as a package that exists located next to one of the largest mines in southern Nevada, a mine that's at the end of its mine life. Round Mountain has got about 2 years in their stated mine line left. Beyond that, they have indicated that they will extend that to 2029 with an underground project they've been working on. But it's important to put in context that project, the underground, will not be able to support the 30,000 ton per day processing facility that Round Mountain has. This project could support that, with the grade and recovery that we have, being located very close to the road, very close to the highway. It's effectively a flat path right to the mine. You could build a haul road fairly easily to Round Mountain. It really does position this project interestingly in that it has a lot of potential on its own, could be developed as a mine on its own. But if you really position it in a kind of strategic way, it really does fit well with Round Mountain and the infrastructure that exists there, and especially with the timing of where Round Mountain is in their life cycle. We really do think that this is truly special, and it kind of has that built-in takeout opportunity with it, and that's really where we want to take this. Grade recovery unmatched in the market in the district, and that's fundamentally the story.
You're a young CEO. Could you tell us who are you, and tell us a bit about your career?
Yeah, so I actually started my career as a software engineer. Was involved in a software company, kind of startup in 2012. Took that project through, ended up selling the company in 2018. With the kind of exit of that, a lot of people are kind of surprised to hear I was in software engineering, and how I got into mining. But with the exit of that company, I had some money. I started investing. Being located in Vancouver, you kind of get access to a lot of mining companies. Obviously, it is kind of the competitive advantage where people have often termed Vancouver the Silicon Valley of mining, and Vancouver and Toronto kind of the Silicon Valley of mining. So being located here, I had money. I started investing, was looking at different projects. One of the first mining companies I actually got involved with, or junior exploration companies I got involved with, was a Defense Metals, which is a rare earth project located in the north of BC, and was very fortunate to kind of be early in that company. And then as over the years, I started looking at other projects, continued to invest in tech. But at the beginning of 2024, became aware of the opportunity with Scorpio. I'd optioned a project that was adjacent to Scorpio's other project, Mineral Ridge, and was looking at potentially selling that project to Scorpio. I became aware that Scorpio is not really in a great position in terms of capital. They needed to refinance. They needed to be restructured. The existing management team was pretty beat up. They needed a refresh. So worked through the process to do a transaction. I was originally not intending to be the CEO, but we kind of got to the end of the road. We were about to close the deal. I've been very instrumental in kind of putting that whole project, putting the whole structure together and raising the money. And at the end of the day, I just saw an opportunity. It was really, I have great mentors, great supporters in our investors, and a lot of them really pushed me to take it on. And that's kind of we ended up here today.
Awesome. So, how many shares and please separate options and other incentive units with common shares do you have Scorpio, and how important is it to your own net worth?
Yeah, so it's incredibly important, like between the shares that I personally own, the shares that my family owns, the shares that are the options, and obviously RSUs. I'm very incentivized with this. This is primarily Scorpio is 95% of my day. I just see so much potential with the project. And then beyond that, I've also brought a lot of my close network investors, family and friends into this company. And yeah, no, I'm very, very, I got a lot of skin in the game, for lack of a better term.
So, how would you say that Scorpio Gold stands out if you compare it to other junior explorers?
So I think there's three primary things that really make us stand out. Obviously, the value of the asset and the potential with the asset, grade, recovery, and then all of the historic data that underlies that. That would be one. Two is the vast amount of historic data that we do have. So this has been a mine that's been mined on and off since the 1950s. Obviously, it's been in reclamation since 1991. But just the breadth of historic data that we do have really does give us a lot to work with. We're talking about probably north of $50 million of historic exploration that we have access to, and that's just in terms of drilling. And that data is incredibly valuable. It's the cheapest drill holes we'll ever have. So being able to leverage that to put out a baseline resource and really have a great understanding of the project is very unique. And that's one of the things that I think really does set this apart. Is this is not a greenfield, it is brownfield, but it's brownfield in with a lot of historic drilling that's been done. And that gives us a lot of confidence in it. And then three is, I'd say, district scale. We're not chasing, call it 1 million ounces, or we're going to be capped out at 1 million ounces. We see a very large potential to truly make this district scale. And then finally, sorry, I said that there was three, but I say there's four. But the fourth one I'd say is also just being located so close to Round Mountain. And with the life cycle of where Round Mountain is today, I think it does make it an interesting value proposition for short-term development and short-term opportunity to be able to mine. We kind of have I don't want to call it a built-in buyer. I'm not going to say that Kinross is going to buy us. I'm not going to guarantee that. But what I would say is that it is the value proposition of being able to leverage the infrastructure that exists at Round Mountain and this life cycle of where they're at with their mine life is particularly interesting. And I think that really does make it unique in terms of not only are we district scale, large potential, but there's a lot of existing infrastructure nearby that theoretically could be leveraged.
You got into Scorpio. Can you say, when did you get into Scorpio? What did Scorpio do before? And recap what you have done since you got in as CEO.
Yeah, so historically, Scorpio was founded in 2009. It was historically focused on its Mineral Ridge mine. Scorpio has produced nearly 300,000 ounces of Mineral Ridge, so done in excess of $300 million over the past, but primarily between 2011 and 2017. The company put Mineral Ridge into care and maintenance in 2017, which really did put a lot of strain on its cash flow. And historically, the company's been very focused on small scale production. So 40,000 ounces a year production, but really not the opportunity to scale beyond that. And that's focused on small scale production is one to call it the common pitfalls of junior mining and small scale mining is it really makes it tough for them to expand and be able to build more infrastructure because they don't have the exploration ounces or the kind of defined ounces on the balance sheet or in their reports that they can leverage to build much larger infrastructure. So Mineral Ridge has potential, but the project is it's in an interesting position. So we see more value in, rather than the small scale mining opportunity that exists in Mineral Ridge, we saw more value in selling that project, realizing the cash, and investing in something much larger. So we're not chasing, call it a couple 100,000 ounces or 40,000 ounce production, 40,000 ounces a year production. We see this Manhattan as a much larger potential, with, call it, north of 100,000 ounces production per year. And multi-million ounces. So I got into Scorpio. I took over the company at the beginning of last year, February 2024, when we closed a restructure, refinancing, and recapitalization of the business. Over the past 12 months, or we're over 12 months now, really kind of there was a lot of house cleaning that needed to happen. We needed to really understand both projects a little bit better, kind of work out a lot of legacy issues that the previous management had kind of put the company in. So we worked through a lot of those historic issues, really kind of put everything back together, have refocused all of our efforts on Manhattan, and also tried to really understand the opportunity with Mineral Ridge. And what we concluded with Mineral Ridge at the end of the day is that selling the project is the best thing for Scorpio, best thing for shareholders, and best thing for investors. So that's kind of where we're at today. We're very fortunate that we're in a strong gold market for sure, and that's put a lot of renewed interest in Mineral Ridge as a small scale mine. So we've had a number of parties at the table who are very interested, and we're pretty excited that in the next, call it 2 to 3 weeks, we'll be able to put some news out to the market to kind of show where that's going to go. And with the capital that we'll receive from that sale, it'll really enable us to be much more aggressive with Manhattan, and that's the ultimate goal.
So who are your core shareholders?
So core shareholders, we have it's primarily a lot of high net worth mining individuals. Adrian Day's Euro Pacific Fund is one of our larger shareholders, consistently invested in a lot of our financing since the restructure and takeover. And then alongside that, we have some other really great high net worth mining individuals who've been very instrumental in help driving the company forward, and a lot of experience. So the financing that we recently closed a $7 million financing in the last 30 days, was led by 5 investors who basically did nearly 80% of the financing. So that really kind of speaks to the value of this. We're not talking about widely distributed retail financing. We have very strong core mining and entrepreneurs who really do see the opportunity with what Manhattan presents.
Let's speak about that financing. 7 million you raised. How much do you now have in cash, and how much do you have in working capital?
Yeah, so we did have, as I'm sure a lot of people can look at our financials, we did have a lot of payables, and that was a lot of legacy stuff that we've been dealing with from last year, and kind of the carrying costs with Mineral Ridge. That's another reason that selling Mineral Ridge is kind of key, is that it does have a lot of carrying costs, so it does need to be producing. So we have about 4.5 million today, Canadian. We're budgeted through for our 6,300 meter program through for the next, call it 10 to 12 months. And then beyond that, the money that we realized from the sale of Mineral Ridge will significantly reinforce that and put us in a much stronger position to expand the exploration program.
You raised 7 million without actually a warrant attached to it, which is quite unusual for sub $100 million market caps in Canadian companies. How could you do it?
Yeah, so I think 2 things is that, one, it speaks to the strength of our shareholders and our investors. They really see the potential with Manhattan. So a lot of them realize that 8 cents with no warrant, 4-month hold financing, even while that was very close to where the market was trading at the time, is still incredibly cheap and undervalued to what this project is actually worth. If you stack this asset up with the data that we have to a number of other assets located in the district, we're trading at a 10th or 8th of what a lot of these companies are worth, and if not more. And that really is the message, and really the opportunity that a lot of the investors in that financing saw, that at 8 cents, this thing is incredibly cheap. Even we're trading at 12, 13, 14 cents today, still incredibly cheap comparatively. So that really was the core driver. So yeah, I think it just speaks to the potential and kind of how undervalued this company is today, that we were able to do it without a warrant at 8 cents. And still people instantly saw the value.
So what's the monthly G&A if you exclude exploration expenses?
If you exclude exploration expenses over the next 12 months, it'll be about 1.4 to 1.5 million Canadian.
If you exclude any sale of Mineral Ridge, if you drill 6,000 to 7,000 meter, what's the estimated cost of that? All in,
including like all geology costs, all consultants, everything, complete, the whole package, but it's about 2.4 million US.
In other words, it's you're fully funded for this year, even without sale of Mineral Ridge.
Correct.
And how are you thinking around assay results? I mean, you are drilling. You have been drilling for 2-3 weeks now.
Yeah, for 2-3 weeks. I expect the initial assay results to be released towards the end of June. The
End of
first
June.
holes.
And how will you batch it? I mean, batch it. Yeah, I mean, 2-3 per
Uh,
holes per batch, or
yeah, two or three holes. We kind of we'll stack everything up as the assays come back, and then we'll do all the QA QC, and I expect it'll be 2 or 3 holes by the end of June.
Thank you for being here today, Harrison.
Thank you.
So, could you tell us, who are you, and tell us about your career?
Yeah, so I'm Harrison Pokrandt, the VPX for Scorpio. I've spent the last, I guess, most part of the last 10 years with B2 Gold, working in exploration. So I've spent most of my career around the world, places like Uzbekistan, West Africa and Mali, Finland as well, and all over Canada. So now my career's taken me to Nevada, where I'd like to share about our projects.
So, I assumed you joined Scorpio at the same time as Zayn joined in about a year ago.
Yep, roughly last May, I believe it was, yeah.
So, could you tell me, why are you the right man for the job?
Well, I guess I like, you go to the story here at Scorpio, and to me, running exploration plans all over, so, like these targets and these structures that I've seen at Scorpio seem I believe, have a very good story to build them out, to build a resource here. This ground's finally put together under one company, and running this program here, I think we can go hard on it and fast. I've got the team together that I've worked with, that we had run 12 drill programs before under previous companies in my team I've put together at Scorpio here. So I'm quite excited on how we can develop this. So this is a general overview of where we are in Nevada. You can see that this dark gray here is the dark beige, I should say. That's the Walker Lane trend. So our main project here is in the Manhattan district, in the northeastern part of the Walker Lane trend, and this is where Mineral Ridge is as well, just to the southwest there. Close to Tonopah, the town is right at the junction right there. As a jurisdiction, we're in Nevada, which is a great place to be for mining. Where in the Manhattan district, there were grades mined greater than 2 grams per ton in the area. We've got infrastructure on the area, so we have our own water rights already, which could, of course, hold back projects to get those water rights. And as well, being in a consolidated district where we're neighbors to elephants, such as Round Mountain, which is owned by Kinross. This is just to show some of our claims and a bit of how this story came together. So I pointed out where these crosses, these yellow crosses are pits. So there's actually an extra pit just under one of these. So you're looking at 4 pits in this area, and then 2 pits in the Keystone Jumbo area here, and they all strike towards the northwest. So towards each other, you're looking at 6 kilometers between where this is where the Goldwedge mine is, all the way down to Keystone Jumbo down here. So we've got the key areas of historic production in this area. And that's where, for Scorpio and for the Manhattan story, you can see how when Scorpio was founded off of the Royal Standard Minerals assets in blue, they had begun to get the area together, and Kinross had actually the land in between. So after Scorpio put a deal together in 2021, the package was more or less put together. We've since as well, and I'll talk a bit about these expanded claims that we staked last year. But within these claims, you have the Roberts Mountain Thrust, which is known to be the main control for the Carlin Trend. Although we are south of the Carlin Trend, it still can be. It is still a known control for a lot of deposits in the Walker Lane. This slide here is actually from some like our work as we started, and we had actually started with between the Goldwedge underground here as we zoomed in here. And then this is where Echo Bay / Kinross had the pits on the south side here. We had a total of 100,000 meters of drilling in our historic database that we're utilizing for our upcoming resource. So it was 100,000 meters, and then that database started to grow, and it's a lot more now that we've gone back to the office and gone through all of the historic drill logs physically and digitized them. So that database is now vastly expanded. So you can see, again, I showed you the drone image at the start, which was just above the underground mine here, aiming towards the west pit. And then you can see right here, this is called the USD pit here. There's multiple pits along the structure that need to be connected through drilling.
Maybe you could actually walk back through the walker lane train and also sort of give me some more color on the geologic setting and also what kind of gold deposits usually are found in the walker lane train.
Sure. Yep. Let's go over here. So yeah, the Walker Lane trend is to the south here. You can actually see to the northeast where you have Nevada gold mines. The Carlin trend in the northeast kind of goes in this area. You can see some of the other dots or some of these other mines over here. So you've got like Anglo's North Bullfrog project is down here. Centerra Gold has their Goldfield project. Fortitude and Borealis are some of the other main assets in the area as well. Yeah. So it's a lot of epithermal style gold in the trend. Yeah, you've got some higher grade epithermal gold in the area.
Like low sulfidation epithermal underground deposits, or generally the open pitable deposits?
You get a bit of both, I'd say. Yeah, a lot of historic actually. It's a pretty historic area for mining in Nevada. So like mining goes back to the 1800s. So you get a lot of these high grade underground projects like that, but most of the mining in the area is open pit. So this is just to show through, I like as a crowd, as a geologist and an investor, to see some, what some results can look like in the area. So this is some of the preliminary shells that we've put together for our upcoming resource. And these are just some of the select highlights for some of the recent drilling. So back until, back to just 2022, you've got grades like, this is one of our higher ones, 27 grams over 16 meters. We had recently also drilled, in last year, we drilled 55 meters at 1.69 grams. And that hole there was actually a step out over at Goldwedge here. So you can see, well, here's the high grade hit here. We drilled under the, we're looking at doing one large open pit resource in the area. So we're doing step outs to see how that this under what was historically an underground mine, how that looks width-wise for an open pit. Seeing 1.7 grams over 55 meters is exactly what you want to see. As we slowly step away from the underground here towards where the west pit is here. And you can see, this part here is the main part of our resource just north of the west pit. We're going to begin to connect the underground to that zone, right through here.
Where has historical mining been carried out?
So historically, actually, there's been mining in the area going back to the 1910s everywhere. And so you're actually seeing up here, this is Black Mammoth. There are some historic underground mines going north of our resource, which is yet to be tested. Back in the 1910s, there's Black Mammoth is a target right here, which had what's called the Thanksgiving mine in the 1910s. There is also over where the west pit is, the east pit, and the USD pit. There were some historic underground mines, but these were as well. These were quite small, hand tool operations from the 1910s. More modern wise, you're seeing where the west pit, east pit is. Those were started back in the 70s. And then in the 2000s, Royal Standard Minerals up here started Goldwedge.
The historical mining, has that been mainly open pit or underground? And how would that impact any future mining operation here, if at all?
Yeah. So the historically, the very old mining was all underground and chasing these high grade thin veins. So it didn't take out like the bulk of where your resource would be. So there is just a few areas, but it's mostly these shallow tunnels that went into these veins in the area. So it doesn't affect it too much. But the main mining that's been done more modernly, of course, is this later mining and over where the west pit is, the east pit here, and the Goldwedge underground. Like the Goldwedge underground actually it's about roughly 3 miles of tunnel within its underground here, which is, as far as underground projects go, not very much at all. So this is actually as well, and I'll go through this in my other presentation here on the metallurgy side, but we've got multiple historic metallurgical tests as there's been production. We have production numbers as well in the area. So it looks like the gold here is free gold, which is not within any sulfides. So it's not going to be. It doesn't look like a typical oxide sulfide horizon on this area. So back in, as an example of this, back in 1989, when they stopped production in the west and east pits, they kept a low grade stockpile, which actually heap leached at higher recoveries than their mill was processing at. So it turns out just using a cyanide process seems to work very well. And I'll go through some of the historic test work. But it suggests that if you paired a gravity process with flotation and cyanide, you can get to greater than 90% recoveries on this ore. So we're looking at, having these multiple historic tests. We're looking at doing modern testing starting this year to confirm the historic test work.
It's all metallurgical test works. Who has carried them out?
It's between, so up at Goldwedge, there was Scorpio's done a test back, The most modern test was in 2012 over at Goldwedge. And then before that, there's 3 or 4 tests by companies like SummaCorp, which started the original pits, as well as you continue through to companies like Echo Bay, which own those pits as well at some point.
Does the metallurgy vary between, between the West Pit and the Goldwedge, for example?
Is there variability?
Yes, is there variability in the metallurgy?
Yeah, you're going from between those two areas. You have a different host rock. You're in limestones to the north, and then to the south you're in phylites and schists. But it's actually both projects have gravity and heap leaching recovery tests that seem to suggest that it's similar styles of mineralization.
Okay, and how much of the deposit or deposits are oxidized in general?
So you're looking at, it's a couple, as I understand, it's a couple hundred meters beneath the oxide horizon. But as well, like I like showing this photo here because this is actually from 1988. Some of the concentrate that they were mining from the bottom of the West Pit within the fresh rock, beneath the oxide horizon. And the gold is still outside of the sulfides, as you can see in this image here.
What are the next steps in terms of metallurgy?
Yeah, so the next steps we're gonna be starting test work this year, and it's to confirm the previous test work that gold is amenable to cyanide. We're very confident in those that we can get those results as well. And it's to build out a preliminary flow sheet for the next resource update after the one that we're giving out this year. So this current resource we're working on will include a metallurgy section, which will have the historic test work.
Okay, and what will you test in terms of, you will confirm that it works with gravity? Will you test bleaching, CIL?
Yeah. Yep. So we're going to be testing a preliminary flow sheet based on gravity and on using cyanide.
Based on everything that you know now and also the size of the deposit, what kind of flow sheet do you think would probably make most sense?
I would think you would to get you get both coarse and fine gold. So you do a gravity circuit to get your coarse gold out, and then probably for the fines you would do a cyanide scenario on it. Perhaps you do a combination of milled cyanide to get to above 90% recoveries, and then for the low grade you could heap leach that.
What generally grade do you have to gold grade do you have to have for CIL a mill to make sense instead of heap leaching?
Yeah, so you would with you can heap leach down to like 0.2, 0.1, something like this for grades. But when you start to get into the let's say around plus 1 gram material, when you start to get, let's say I'm just going to make up an example here, but if you get 70% recovery, or actually with our grades we're seeing 77%. Let's go with that. If you're getting 77% of 1 gram versus 90%, that's 0.2 grams per ton that you could be losing in your economics. So it's I guess it's a bit of a balancing act between what the cost is to get to that 90%. Or if you process at a cheaper method like leaching. So this is as well just to speak to the resource we're putting together here, and I'll go through a bit of an update on where that resource is as well. But as we look at putting this maiden resource together, we're seeing that this ore looks very amenable to cyanide as a free gold system. We're aiming to start with a pitted resource greater than 500,000 ounces. If you can get to those higher recoveries with a resource above 1 gram per ton, we actually looked at projects within the area, how they compare with those types of results, and that can make actually potentially the Manhattan district a very high margin mine. So when you're above that 1 gram material and very high recoveries. So that's where we think this project can stand out quite a bit. So this is as well just like an update on how our resource is going. We've actually, since we finished drilling last year, we've gone back to the office to go through and digitize some of the historic drilling in the area that we can utilize for this resource. Going through the physical logs, log by log, you'd have a handwritten log from going back to the 70s, and a few going back to the late 60s as well. So we've now digitized all of those, and as I mentioned earlier, we started with around 1,000 drill holes and 100,000 meters of drilling, and that database has now grown to 1,800 holes with about 140,000 meters of drilling. So that, of course, that number will vary here as we start to confirm these drill holes for the resource. But this is, we've spent the last 6 months here for this resource. The cheapest drilling you'll ever do is the drilling that's already done. So this was definitely an exercise that was worth it for the resource.
Can you speak to the quality of the historical drilling? How much is RC? How much is diamond? Do you have any preserved core? Can you use all of it for your MRE?
Yeah, there is certainly like some holes that you have to confirm what they use for QA/QC, with what their methods are. So working with our QP on going through what holes would meet a good standard for historic work. And then as well, most of the drilling on your other question there is RC drilling. So it's almost 95% of the historic drilling is RC in the area. So we are currently as well on that as well. All of our drilling that we're doing right now is diamond.
So in other words, most of the drilling you will be able to use, and you have the logs at least for all of it.
Yeah, that's what we're aiming to use the most of it as possible here. And this is as well. When the report is put together, if you can always, if some holes can't be confirmed, you can twin some of them a part of those programs to confirm their assay values and add them to your resource eventually. So, but we're confident in most of the drilling, as there was, different standards for their quality control historically, but we can see in almost all the programs, there was a good quality control program put in place. And this is actually as well, just to show on who's worked in the area. These are all the separate companies that have worked in this area here historically. So there's been quite a few companies have come through the area and looked. Yeah.
Obviously, this is good, but also when you see this, you see, okay, 140,000 meters of drilling, a little bit over that. A lot of companies have worked on it, but there has been at least no modern scale mining operation here. Why do you think that's the case? And also, what do you think? How do you interpret this differently, or how will you do it differently?
So I'd actually, as I see it as well, I think you're right on it. There hasn't been any larger scale operations. You do have, there's the west and east pits here, which are larger operations that got a couple 100,000 ounces in the area. But because the Manhattan district has been a historic mining district since the 1890s, you've had all of these separate companies with small patch claims. So no company that's ever come in here has actually ever had the entire strike length under one company. That's why I believe there hasn't been any larger scale operations here. So as an example, you can see these beige holes are the Goldwedge underground, which actually Freeport did some work on back historically. And then to the south was either Echo Bay, Sumacorp, or Kinross. But Kinross as well did not have to the north here where Goldwedge is, or to the south where Keystone and Jumbo production is here. So it's just always been just small. Nobody's been able to compile the district under one company, and that's what gets me excited too to build this resource. There's not been a 43-101 on these projects yet, and that's where it surprises me. You see a free gold project that's above a gram. I believe it's a compelling story myself.
And by the way, what's the timeline of the resource? You say Q2.
Yes, we're looking. It's actually, as we've gone through this drill hole compilation effort, it's been far more successful than we thought. So we wanted to take the extra time to make sure we get as much of that drilling possible that we've added in. Those extra 40,000 meters that we've compiled now. So we're looking at we're going through right now the resource calculation part. And so we're looking at currently our target is June or July for that resource. So I'll quickly walk through here as well some of our targets for exploration this year. I'd like to get for our drill program we've put together a total resource of 1,000,000 ounces unconstrained. Get the metallurgical program I mentioned done to prove the historic test work. And then as well, because we've got much of the district under one company, complete some preliminary mapping and prep some of our distal targets for future drilling, such as the Keystone and Jumbo areas. This figure, actually, I just would like to show. This is from David Reese, the consultant here. He wrote a report on Round Mountain, which is right here. So Round Mountain in the area is the 15 million ounces. It is the largest heap leach in the Walker Lane trend. Is just north of the Manhattan caldera. So this is where we are with the historic district there, and then you go to the other side of the Manhattan caldera, and then there's Round Mountain. So this is just to go through here where this year's drilling is going to be is going. This actually shows as well where some of these main controlling structures are in the lithology. So where you have this is the west pit here, the east pit here as well. There's a large fold which you can see just like this that goes. This is the Manhattan anticline, and as you have your vein set where here's the USD pit, it strikes to the northwest as it goes to the west pit, and then all the way to here's the Goldwedge underground. So as these structures intercept this fold here, and then as it approaches the caldera margin, are some of these as these structures intercept. Are your controls for where gold is. So that's where you have Goldwedge is in the overlying limestones in blue here. And then the west pit is in the Gold Hill Formation just underneath. So this is actually as well the Gold Hill. These formations are the basement rock to Round Mountain. So you do have these rock packages in where Round Mountain's going underground at the moment. So this is the basement rock to where the main pit is there. So our main objectives. Oh, go ahead.
Yeah, I was asking regarding. So, how is the gold hosted? Is the vein hosted, or is it shears?
So you actually there was some orogenic. You do have some folding in the area, which created this open fold here. But the vein set does follow. You do get these banded shears, and then the veins came in after and just follow those. So yeah, it's vein hosted. These are vuggy calcite quartz veins that intercept these structures. So yeah, mainly vein hosted. It follows the fracture sets that were set there before. Yeah.
Okay, and the faults. I mean, do the deposits, such as the west pit, extend over the fault, or is it post mineral?
So it's actually it looks to be sin mineral. So you actually or how do I would say it's the faulting, it could be a bit of both because the fracture set was already there in the rocks. And then the veins followed through where those fractures are. But then you do have some, reactivation here and there as well later on. And so this is actually just to show on this diagram here, you've got between where the Goldwedge underground is here, and then this is the USD pit here. It's about 1.8 kilometers of strike length for the maiden resource area. And then these red line areas are parts of the structure that haven't been drilled yet. So you're actually looking at, as Goldwedge, it's a 400 ton per day mill that we have on site. We're looking at a scale that would be much larger than a 400 ton per day mill could hold for production. So that's where under some of the, where the current infrastructure is, needs some infill drilling, and then connecting these pits as well. Hasn't been drilled as well. So you're looking at 400 meters of that 1.8 kilometers is what we're infilling right now. So near surface targets is what we're mainly targeting this year to prove up the strike length. So these here are some of our 5 main target zones, and this is as well here between these 5 zones. I've got ranked here as we're going to start this program here. We have phase 1 is up near Goldwedge, and then we will be moving towards the south. We're starting with it's about a 6,300 meter program this year, but we're looking to expand that very soon. So we've planned extra drill holes as we have some financial options coming up forward here to do much more drilling than this original plan. And this is where as well, we're starting, as I mentioned before, this is that gap zone I mentioned. You can see how the resource shell doesn't cover this area between where Goldwedge is here and then the west pit down here. And then so there's some more exploration targets like Mustang Hill, which I'm quite excited about that we're drilling really quickly here. There are areas as well where you get towards the west pit that need to be infilled as well, or not infilled, step out drilling. And then as you move to the south to where there's this is the USD Union Stray Dog pit here. To add on to those ounces as well. So this is one of our first priority target is in what I'm calling the gap zone. So the gap zone is in the yellow here, but there's another target here I'm calling the Zanzibar trend. So as you actually, let's see if we can see the geology if I go back here. The main structure comes to the northwest like this towards the caldera margin. And then the Zanzibar limestone contact is actually right here, is along this caldera margin. So you have your main control for gold coming up and intersecting these limestones, and then you get some higher grade gold within the limestones, which actually strikes oblique to your main orientation for the veins. So if you can see in this slide here, there's the design stopes for Goldwedge is this black line in the blue. I'm not sure if that's hard to see or not, but it actually trends to the southeast at a different direction towards one of our exploration targets here, which is Mustang Hill. So this target here is actually where we intercepted the 1.7 grams over 55 meters last year, which we are immediately following up on, as you can see some of these planned holes here. So we're hitting 2 targets in this zone, being, of course, the Zanzibar trend I'm mentioning and the Reliance Fault here. You can actually see, as we talked about earlier, some of the historic mining in the area. You can see we have 3D models that we built of some of that historic mining right here, which is just, man tunnels from back in the day. So there was not like bulk mining from the 1910s. Not a lot of rock was pulled out, but it can show you these trends very strongly that we're drilling. So this is to show as well, right through here. This is the 1.7 over 55. That was at right here, so B2B prime through here. You can see the high grade hit just right here. As we drilled through it like this, we undercut what's known as the Goldwedge underground and stepped out as well. So we stepped to the southeast to slowly move towards connecting to the west pit, and then that's where we hit a great result there, which again we're immediately following up on. So some of the other zones, and I'll go through these zones pretty quickly here. I'd like to add, these are just some really quick back of the napkin numbers on these areas here. But there's the Indian Camp pit is just right here. Which was mining some of the limestones to the south, and there are some areas here as well, as you can see, that's not been drilled for in the area. So you're looking at right here There's some low-grade mineralization near the Indian Camp pit here, and the Reliance, as it projects deeper, hasn't been drilled. So in these areas here, you can see how our main resource goes down to this two past. That's roughly, how many meters is that? It should be more than 200 meters, about 300 meters. That depth has not been reached under the West Pit, which we will be adding to bring the whole resource to the same depth. So as we continue as well here, Mustang Hill, I'm quite excited about this target here. As I mentioned earlier, you have that Zanzibar trend going to the southeast here, which is oblique to the West Pit structure. This was drilled back in 2022 on Mustang Hill, and as through the cross section here, you can see where the West Pit is here, and then you can see the main anticline here, the fold hinge. Just on the other side of the fold hinge, if you can see just like this, is Mustang Hill. It's on the right limb, and just the left limb has been mined. So as a conceptual target, it makes a lot of sense to be within the same geology on the other side of the fold, of course, for a target. So there was some of the higher grade historic mines from the 1910s were in this area, but it's not been followed up on drilling aside from this 2022 drilling by Scorpio, which has some intercepts of 40 meters at 4 grams per ton.
At what depth was that?
Pardon me?
At what depth was that?
That was actually right near surface. Was that intercept? So it was. I'll have to get you that depth, but it was within the first 100 meters.
And why was it follow up on? I mean, this is a very good intercept.
Yeah, it was. It's actually. So this was back in 2022. And then I'm looking to follow this up right away. But this was the last. This was the last phase of drilling before myself and Zayn came and joined the company. So I'm sure there was a lot of motivation to drill it. But now that I've joined on, I want to follow up on this very quickly as a result, because it's a great result. And you're seeing as well, actually beneath that 40 meters, 4 grams, you get these 3 intercepts of 25 meters of 0.8, 35 of 0.8, and then 13 meters of 1.7. Those are beneath. That's deeper mineralization, but those 3 intercepts are within just a few meters of each other. So that's actually it's quite a wide zone between those hits as well, which we will also be following up on. So this for me is quite an exciting target, as it's not been a main focus of any of the previous companies. And I actually historically believe it wasn't a target, as it was owned by the owners of the West and East pits. But this Goldwedge area here was always owned by somebody else, almost like a checkerboard. You'd have, right, your separate owners. So it just, connecting it wise, it was tough for previous companies, as the separate ownership, patchwork ownership couldn't let you develop the body correctly through drilling. So these are just some of our priority holes in these areas. We're going to be testing the caldera margin as well here, which is in this box zone here. And then we're going to be stepping out. We have some wider intercepts of the Reliance fault coming through here. And as well, Mustang Hill are these higher grade hits, if you can see these shells here. And I'll just quickly go through some of these ones as well. We had an expert, so Dr. Nick Oliver, come out. He's already been to site. And we've gone through mapping all of these pits, all the pits, to help with our targeting. As this area has this open folding, fracture sets going in different directions, we wanted to contextualize all of our targets very well. So we've now gone through that process, and you can see here you have these limestones are known historically as some of the main hosts for gold, and all these different vein sets going in different directions here, cross-cutting those units. So that's where up at Goldwedge you have that a bit of a blowout in grade within the limestones. We're looking to follow up drilling through some of these limestones here and these fracture sets. So this is to look at connecting the USD pit here to the West pit here. I can go quickly through some of these other targets as well, but this is the East pit here. We want to go along strike of the East pit. So there's some structures come out of the high wall of the pit here over here, and then we want to begin doing some step outs to the south of the East Pit as well. And then just some of our other holes, like there's the green line here. There's a historic underground mine that is perpendicular to the East Pit, and you can see the structure going this direction here to the southwest. We would like to undercut some of those to test those targets at depth. So within the regional mapping, and how I like to put this, this is really like, as I was saying, it feels like a district play, of course, because we have so much historic production in the area that's never been under one company. And you can see this yellow shell is our outermost shell for our resource, for the resource we're putting together right now. And that's over that 1.8 kilometer of strike length here that I've previously mentioned. And as we want to start to build out this resource, you look to the north here at Black Mammoth, which is where I mentioned there's some 1910s, a lot of historic underground mining in that area, which hasn't been drilled for over 20, 30 years. And there's just some quick holes, vertical holes in that area. So this is a target to map this year to get ready to drill. So I would like to aim for next year to start to prove out beyond this 1.8 kilometer strike length. And then as you go to the southeast, the structures at Keystone and Jumbo, these are some quite deep pits here that also actually strike towards our main resource area. So you're actually looking at, in total, that's 6 kilometers of strike length. And we're just starting with the first 1.8 kilometers for this maiden resource. So some of the other target areas in here that we would like to map as well. So Round Rock is the Caldera margin. And of course, the Caldera margin is very important over at Round Mountain. So this is an area we would like to go through, map, and look at some of the historic work that's been done in the area for us to follow up on drilling. Of course, Black Mammoth and Keystone Jumbo are along strike of the same structures that control our current resource. Mariah here has a lot of historic mining parallel to our main resource. So this could be looking at some parallel structures in the area. And then Timber Hill, just down here, we have it's a 3 kilometer long strike length of a soil anomaly. So you get anomalous arsenic, gold, and antimony within this area here that we would like to look at for drilling as well. This is actually right here. Some of the patented claims down here are the original patented claims going back to 1890. So that's some of the original mining in the area.
And geophysics that's needed here?
Yes, we would like to do geophysics as well. So we're aiming to get this year in the winter season to fly some detailed magnetics over our entire claim package.
So the resource that you will release in a month from now, will that be constrained or unconstrained? Pit constrained, that's it.
We will have it pit constrained, but we should be stating both a pit constrained and unconstrained resource in there. Yeah.
When you say targeting for over 500,000 ounces, is that pit constrained or unconstrained?
That's pit constrained. So that's just the pit constrained resource. So the unconstrained should be much larger than that.
Where will the bulk of the resource be as it looks now, in terms of Goldwedge or Western Pit or Alliance?
So you're actually looking. I can go back just a few slides here just to show. Here we go. This is the main bulk of the resource here. So you can just see the edge of the West Pit here. So just to the north of it, right before the road there, this is the main bulk of the resource here. And then you're also looking at as well, this is where Goldwedge is. But we're looking at as well, you can see these areas here we are currently looking at connecting. We want this to be one open pit, large resource.
Do you think the drilling that you're undertaking at Zanzibar and between Goldwedge and West Pit will be enough to connect it?
Yes, it should be. So we've gone through with our resource geologist to make sure we've optimized our spacing on the drilling. So this should be enough drilling to truly connect these zones.
What's ballpark the distance between them?
Between the zones?
Yes.
It's about roughly 200 meters. Yeah.
And from what depth generally does the mineralization start here?
So it starts right near surface, and we are currently drilling it down to, I believe, about 150, 200 meter depth. at the moment. So a lot of this body hasn't been tested at depth yet, as we're still proving up the strike length as well, going after the shallow ounces.
We say started right at surface. So what does that mean, ballpark?
So you're looking at the top cover in the area is usually less than 20 meters thick. So you're looking at where the bedrock horizon is where the resource should go up to. So it's right near surface mineralization.
Do you have any thoughts on strip ratios here?
Yeah, we're aiming to start with this resource with about a 4-to-1 strip ratio on this resource. And we're looking at the resource is going to be above a gram per ton, so I would say around 1.3 grams per ton.
I mean, saying that you sell mineral rich, you can increase the meterage, double it.
Yeah.
How would you allocate those meters preliminary?
So those meters, actually, we've actually planned out quite a few of those meters. So adding on to some areas such as Mustang Hill, adding extra drill holes on this area to add some ounces. More drilling as well as these separate zones. If I just look at the south here, adding some drill holes to connect the west pit more to the USD pit, and actually covering some of these limestones have had historic production on them as well. So that's where we would be adding ounces still near surface targets. Yeah.
In other words, no deep, no below 200, 250 meters drilling.
Yeah, only drilling that would be deeper is just some of the targets under the west pit. But aside from that, it's all shallow.
I mean, obviously, when you look at 140,000 meters have been drilled here. So how much, if you would drill another 10,000, how much of a difference, or in terms of actually growing the deposit, could it make?
Yeah, so you actually, a lot of this historic drilling, as this was production drilling. So these were small step outs from where the west pit is as you come to the northwest, or a little bit to the southeast here, or around some of these pits. So these holes were mostly grade control holes, and so those have defined ounces just close to the previous production. So as we start to step out, we're able to drill quite a few targets that weren't able to be drilled because of this checkered board historic ownership. So I actually think you can start to add ounces here very quickly. As an example, as you see the limestones here as they come up this way, was actually separate ownership for a long time as well than from who owned the west and east pits. So if you were producing these, you couldn't touch some of the ground right near your production. So that's where we can add ounces, I believe, very quickly in some of these target areas.
What do you think ultimately the size of the prize is here in the Manhattan district? Or to your vision.
I'd like to get to I'd say like at least 2 million ounces in this area. You're looking at, let's just go to the regional photo here. I like this one, this figure, because I think it shows what the scale can be here. We're just defining this 1.8 kilometers of strike length currently, but you're seeing production along strike where Black Mammoth is, historic 1910s production there. You're seeing there's these pits down at Keystone Jumbo from the 70s as well. So you've got this 6 kilometers of play area here to add to a resource. So as you get to Keystone Jumbo, I believe we could add a couple 100,000 ounces there. As we prove out the strike length here as well, I believe you can start to add ounces quick. So I definitely think you can get to the multi-million ounce potential here.
And when do you think it would make sense to do an updated MRE?
Yeah, I think we'll have this initial resource come out this year, of course, and then from there we want to be able to bring the open pitted resource above 1 million ounces. What is constrained. So once we're able to drill out and define that, we'll give out an update, and then from there as well. Once we have this more modern metallurgical test work as well to fit into that new update.
Do you think ultimately, if you're successful, that this will be one, large pit, or that it will be, at least 2 or 3, smaller pits?
Yeah, I would like this to be one pit. So as you're looking at for this maiden resource here, this area is all looking. We're looking at one pit for this resource. And then as we continue, going along strike, I'd like it all to be within one pit.
And what similarity? Obviously, around mountain is a beast. But what similarities, differences do you see compared to Round Mountain?
So yeah, actually, Round Mountain, they're on the other side of the Manhattan caldera. They are actually within the tuffs, which the volcanic units, which would be sitting above our mineralization. But you do see part of that. I mentioned that orogeny for these calderas as the horizon starts in the north and moves south. We are at just younger age than their mineralization, which is expected as your mineralization starts at 40 million to the north and gets younger. So we are about 16 million year old mineralization, and the mineralization up at Round Mountain is 24 million years. But they are as well, being in the hanging wall of our deposit. Their basement rock within the bottom of the pits is our main host, which they're, as they look at expanding to the Gold Hill underground mine, our main host is the Gold Hill Formation for the pits. So you're looking at similar styles of mineralization, and there is actually a bit of a shared history between Round Mountain and the pits here. As when Round Mountain was initially started in the 80s, the first high grade production was actually shipped to the mills down at Manhattan for its initial production to start those pits. So there is a shared history between the projects.
And how compatible do you think your ore would be with Round Mountain, if there would be any type of toll milling or ore selling agreement in the future?
Yeah, I do believe, because this looks like quite a flow sheet wise, as this looks to be amenable to cyanide. They do look to be quite similar. There is already a shared production history between the projects, as again the Round Mountain ore was processed at Manhattan, and then as well, Round Mountain is a heap leach project. It is a cyanide project as well. So you are looking at similar types of production.
I think we'll stop there on Manhattan. Maybe you could just quickly give us a technical overview or geological overview of the Mineral Ridge deposit, which you are about to sell.
Yeah, Mineral Ridge has been historically the main focus for Scorpio. And there's been between the history of the project, there's probably been about 1 million ounces produced there. Scorpio Gold produced, I believe, about 200,000 ounces there previously. And as a project now, it has a current resource of about 240,000 ounces at 1.6 grams per ton. And there's also another 115,000 ounces still within the leach pad. So his previously, it's as a project, it was heap leached at around 65% recovery at 1.6 grams, which is quite high grade. So you get some, above 1 gram per ton out of that leach pad. Our current 43-101 on that project is to build a mill, a 4,000 ton per day mill, to get to 90+% recoveries. And you can get some of that gold that's left in that heap leach pad, and you'd be also mining that other 250,000 ounces that's still in the bedrock there. So it's a great project for production. That is where as well, as we are currently focusing on exploring Manhattan, we believe we have multi-million ounce potential over at Manhattan. We want to find a good partner or home for Mineral Ridge, as gold prices are very good, and there's a straightforward path to production there at Mineral Ridge. So that's where we are currently looking at, yes, again, finding that partner, and then we can fully concentrate on exploration over at Manhattan.
So Mineral Ridge, you're about to sell it. What kind of groups are interested in Mineral Ridge? And also, generally, if you could speak to what's the size of the project? What does it have a resource? It was in the presentation, so we're good to get some color on it.
Yeah, so Mineral Ridge has a 250,000 ounce 43-101 resource, and then another 100,000 ounce resource in the leach pad. It's about 1.3 gram per ton average grade. The issue with the project, I would say, is recovery. Recovery is not super high on those numbers, but still at today's gold price, very economic. So call it 350,000 ounces modeled at $1,700 gold. So that number is probably quite a bit bigger today if you model it at a higher gold price. But the groups that are interested are small scale mining operators. So small private companies that see the potential to operate and generate between, call it 40 to 50,000 ounces a year in production. And that's their focus, right? They want the cash flow from that. But what I would say is for a company like Scorpio and our motivations and our investors' motivations is we just see we could invest, call it $5 to $10 million US in starting up that mining operation at Mineral Ridge and maybe being able to realize, call it $30 to $40 million in profit over 5 years, 6 years. The value proposition of investing $5 to $10 million US in Mineral Ridge or in Manhattan and being able to realize, call it 100, 200, $300 million US in return for selling the project, or kind of true value and valuation, just based on the size of the asset, historic recovery, grade, all of these contributing factors that really allow us to comparatively value it at those numbers. That's the opportunity. So the value proposition of putting 5 to 10 million up to generate 40 million in profit over 5 years versus putting up 5 to 10 million and being able to realize north of $250 million, that's what we're talking about. And that's why our investors are so much more focused on Manhattan. So but that's not to say that Mineral Ridge is a bad project and you can't make money at mining it. It's just, it's not, the exploration potential is very greenfield. So you're kind of limited in the ounces that exist there, that 350,000 ounces that's there. There's not really been any defined ounces beyond that. And you would probably have to go outside the mine gate to further define that opportunity. So it's just a value proposition. I think for a public company and call it a small scale, like not a junior mining company, junior exploration company that's publicly listed, we want to deliver an outsized return. And that's really the potential we see with Manhattan in terms of a cash flow opportunity and all the pitfalls that come along with small scale mining. The risk is just not worth it for what exists with Mineral Ridge. And we can get much more value out of selling it and then leveraging that cash to invest in Manhattan.
What kind of payment structure would you prefer in a sale?
Well, considerably all cash up front. The structures that we're looking at are call it high percentage of the total value in cash up front with some deferred payment on the back end.
Okay, good. Let's speak to Manhattan. So could you give us some more color on the infrastructure in Manhattan with regards to water, energy, and roads?
Yeah, so water rights are a really important thing in Nevada. Obviously, I'm sure everyone's somewhat aware. It's fairly common knowledge that water around the world is becoming a much more scarce resource. So water is very important in Nevada. We do have established water rights, which are very valuable, and that gives us kind of a leg up against a lot of projects that are kind of late stage exploration, pre-development, close to development stage. And that de-risks it a lot. Two, Nevada is a great place to operate in general. As I said, like a lot of historic production in Nevada, a lot of current production in Nevada. 90+% of the gold in the U.S. comes from Nevada. So that really does, again, it's a very pro mining jurisdiction. The state, the federal government under Trump, etc., BLM, very pro mining. They do want to see these projects develop. They want to see kind of production start to occur. They want to see new mines. So a lot of support in that respect. A lot of support. Having the water rights does de-risk it a lot. And then the fact that this is a past producing mine, we have an established plan of operations on our underground and with our mill. And we're in the process of expanding that plan of operations to encompass all of the Manhattan ground as well to the south. So really kind of the de-risked opportunity is that because there's so much historic disturbance and this is a past producing mine, we're not kind of breaking ground and further disturbing kind of fertile ground. We're basically just redeveloping or reactivating a historic mine. The other thing I'd say too that I often don't highlight is important is that the core parts of the resource and a lot of the kind of central parts of the past producing pits and the Goldwedge ground exist on patented ground, which is wholly owned ground. So it's private land that we own, and that also gives you a lot more latitude to operate in those areas as well.
So what's in other words, you're not finished consolidating the Manhattan project?
I would say that land acquisition and growth is important. You can see it a lot of the staking that we did last year. We have made the project vastly greater. We are actively exploring and looking to build more.
So say that if you would permit Manhattan to be a mine, well, let's separate it. If you if you would permit just to mine it and say, truck it to Round Mountain, do you have any expectation how long that would take?
Yeah, like it's in the number of years, like maybe 2 years probably to permit that. To be able, if with that kind of model of trucking the ore around mountain and being able to leverage their processing facility. If you're looking at building the full mine out at Manhattan, it's going to be a little bit long. Or it'll be longer than that. It'll be called 3 to 4 years because you're going to have to get the permitting for the processing facility as well. But in terms of like bulk sampling and being able to take ore from the existing projects, yeah, it would be, call it 2 to 3 years roughly, probably.
What royalties are there on Manhattan?
So it's about a 2% royalty across the entire project, average. But there is some opportunity for our ability to buy some of that back, and we're just going through those processes now.
You have 2%. How much buyback to what kind of, and also what kind of amount are we talking?
Buyback to 1, which would probably be the average across the project. Kinross holds a 2% NSR across the vast, or call it 60% of the asset. That is there's no buyback on that. That's a standard 2% that Kinross owns.
And obviously, I mean, you have made it clear that you're not here to develop it develop Manhattan on your own, or that's not at least the goal.
No, I wouldn't say that we're not. That's not our intention, right? Like we are moving this project forward with the intention to develop it and build the mine at Manhattan. That is the goal. That's how we're approaching the project. That's the opportunity we see. What I would say is there's opportunity for M&A and a transaction sooner rather than later, and we're going to entertain all of those opportunities. It's not necessarily saying that we're not going to build the mine at Manhattan. We're going to work the project like we are going to build the mine, and we're going to develop this thing. But to say that there's not kind of closer near-term opportunities for a larger, call it mid-tier producer, or for instance Kinross, to come in and buy this thing, we're not going to ignore those opportunities as well.
That's really the mindset you have to have. Obviously, of course, it's in almost all cases advantageous for juniors to sell it if they have the chance. But yeah, I mean, if you have the ability or to actually develop it on your own, or at least develop it a long way, that certainly helps in negotiations with larger companies.
Yeah, and I think the key thing there is district scale, right? Like being able to show that this is a 100,000 ounce producer, 100,000 ounce a year producer versus a 50,000 ounce producer. That's what makes that is the kind of the threshold, I think, to make this thing interesting to a lot of, we'll call it not only mid tiers, but also make it interesting on its own. So being able to finance it, being able to develop it, is because you're kind of over that threshold where once you're at that size, you don't have all these historic pitfalls of what exists with kind of small scale mining, like Mineral Ridge as an example.
Yeah, no, I agree. I mean, 100,000 ounces it's definitely a threshold for it to make sense to develop it on your own. But that we're not there yet. But obviously,
we see how we can get there. We can see how back of the envelope economics can be presented that show those numbers, I guess is what we're saying.
What's your thoughts on a JV on Manhattan?
Yeah, I think that definitely is a potential for sure. I think we're going to start talking to strategics in the next couple months. I think we're already kind of actively having some of those preliminary discussions. We'd love to kind of obviously get a strategic investor on our cap table, call it a mid-tier producer, and we're kind of going to start to have those conversations, and that's something we're actively working on right now.
So obviously, if you get the Mineral Ridge sale, that would be great for your treasury. If you don't, or either way, to be honest, either if you get it or not get it, how are you thinking in terms of the next round of funding?
Yeah, like I think it really does. It really does depend on how Mineral Ridge flushes out, which will determine that. We probably would look to raise more money towards the end of the year, but depending on how, we obviously have some warrants outstanding that could obviously be kind of a built-in financing as well. With the back of drill results, delivering the resource, kind of the number of catalysts that we have in the next 60 days are the re-rate. So being able to leverage those to re-rate the business, that's the opportunity. And then on the back of that, we'll kind of see how the market reacts, be able to kind of plan out our financing. And alongside that, the sale of Mineral Ridge is probably the one kind of outset thing too, right? So if the sale of Mineral Ridge is kind of consummated in the next 30 days, that really does change the calculus. But regardless, probably towards the end of the year, early next year is when we look to do the next round, and we'd want to do it at a significantly higher valuation at the end of the day, regardless.
So, where do you vision Scorpio Gold in 2 years from now?
I hope we're in a very in-depth M&A position, and we're looking at potentially selling the project. But I would say at least 1.5 million to 2 million ounces in a very strong resource. Kind of at the stage where we're looking towards do PFS, or in the midst of PFS, and ultimately, having developed a pretty strong resource with very good grade, really solid grade comparatively, and then having a lot of call it modern metallurgical work to back up really what we believe in terms of recovery.